Good morning, everybody. Welcome to Forex.Today. Let's get the party started. Hey, there's my pips. G'day, Adam. All right. Hey, good morning, everybody. This is your daily Forex strategy session. My name is Wayne. I'm here to remind you, first and foremost, that trading is risky and not appropriate for everyone. Why? Because you put some money into an account, and you could lose that money. Could be your fault. It may not be your fault. You might make a good trade and lose money. You might make a bad trade and make money. Your past performance is not indicative of future results. To give you an example, when the market was weak, the dollar got strong, and when the market got strong, the dollar got strong, and somewhere in between there it did get weak. And you're like, well, the thing that created the strength first started with poor global macroeconomics. And now what makes the dollar strong is positive macroeconomics, and it's the exact opposite. This is why you try to look at past performance to try to see how a trader will perform in the future, but you're not looking at how well that trader did just recently, because that you would say, well, past performance is indicative of that. Well, what you're looking at is over a long period of history, you want to see how the market changed over history, meaning, let's say 5 years, the market sentiment, the market mechanics might have changed 3 or 4 times. How did the trader perform during the market changes? I think what some people get caught up with is they find a trader that performed very well last year, and they think they're going to perform very well this year, and that is not necessarily true. In fact, there's a pretty good possibility they won't, because their trading strategy fit that one particular market condition, but market conditions do change. So stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So my name is Wayne. That's me right there. Good morning. I'll put a little hat on. Get formal for you guys. I messed it up. I have a big hat now. Cowboy hat. Been trading currencies for, well, publicly over 10 years now. So I'm here to be your guide. Today is a Monday, and what I'd like to do is go over the calendar to plan out our risk events for the week. But I also like to look at the Commitment of Traders report, which was made available late on Friday afternoon, which shows us large institutional positions in the market. The big example is for about 2 or 3 weeks, we had a rally in the euro dollar, and the Commitment of Traders report told us that was nonsense, and that you should get ready to sell the euro dollar again as the bears get back into the market. Well, if you had listened to that advice, you would have maybe missed a whole bunch of trades for 2 weeks, and then last week made about 300 pips. That's it. We do these sessions 7:30 in the morning. It says here to 8:15. I usually go another half an hour longer than that. So I usually go to about 8:45. We're here at Forex.Today, Monday through Thursdays, and then every Friday at fxstreet.com. To watch a recording, please just go to Forex.Today. I put the recordings up here. You can you can go back even several webinars, and you'll find them there. If you want to see every webinar ever done, you can just click here. And then, of course, at Forex.Today, every single day you'll get at least a dozen new trading ideas for the Forex market today, hence the name Forex.Today. You want to know what's going on in Forex today? Go to Forex.Today. If you register also, you'll have access to the community chat. So anyways, open up a live trading account at TradersWay.com and let's trade together as a team forever. Boom! All right, so here we are at Forex.Today. Like I said, if you're logged in, you have access to the chat room. Good to see everybody there. And today we're going to spend a lot of time on Forex.Today under the News tab. Felipe's like, forever? Forever, ever? Sorry, Miss Jackson. So let's start with the calendar. Now, what do you think is going to dominate the focus of the market this week? Well, the cool thing is we've already talked about it maybe, what, a month ago? 6 weeks ago? We've been talking about this week, haven't we? Now, remember, part of what I was talking about 6 weeks ago when we were making our educated guesses was that this week the Bank of Japan would announce further quantitative easing. And then about 2 weeks ago, maybe 10 days ago, that sentiment changed quite a bit because the Bank of Japan came out and said, no. Kuroda said, no, we're not going to do any more. There's no need for that. Well, that kind of ruins things, doesn't it? So now what? What's going on more recently? And was it Sebastian that had the question just earlier as we got going? Let me go back. Sebastian, since Draghi talked the euro down, now first of all, we discussed that before it happened, but I said they're going to say it, but they're just not going to do it for a very, very, very long time. So let's see what happens there. Draghi basically said they were going to add to quantitative easing or change, whatever. They're going to make a policy change in December. He said it. I still don't believe it. Just out of past history. Okay, so anyways, Sebastian says, since Draghi talked the euro down, and that the ECB is ready to act with more stimulus, do you think it'll be easier for the Bank of Japan to act now? Or do you think they'll wait for the Fed? All right. Do you believe the Bank of Japan is going to change their policy because, or perhaps not because, of the ECB? I don't think the Bank of Japan gives two hoots about the Eurozone. Now, obviously, I'm exaggerating for effect, but no. The answer, Sebastian, is no. So Sebastian follows up, well, then, is it China? Well, why would Japan care about China? Let's talk about it. Instead of me telling you my opinion, let's just talk about it. They compete. Okay, well, that makes sense, right? So, what has China done recently that may be a catalyst to put further stimulus or further monetary easing or further quantitative easing out of the Bank of Japan? See, 2 weeks ago, they said there's no way we're going to do it. Even though 6 weeks ago I said the Bank of Japan at the end of October is going to surprise the world and increase quantitative easing. I said that at least 6 weeks ago. But then, 10 days ago, whenever it was, maybe it was just last week, Kuroda, the Bank of Japan, came out and said, no, forget it. We're not going to do more quantitative easing. And I had a little bit of pie on my face. Like, well, I threw out a big guess, right? Just because I think they need it Doesn't mean we're going to get it, but it has to do with going like basically a whole year without getting any progress towards the said goal. So that was my guess. And there's some other things in that guess, obviously, but that was my guess. So then just recently, the Bank of Japan said, no, we're not going to do it. We're not going to think about it. We're not even going to talk about it. So I looked like I was wrong. But then on Friday, Japan's #1 competitor for the exporting market cut interest rates and cut the reserve requirement ratio, which is exponentially more important than cutting interest rates. But cutting interest rates for most economies is a massive deal. Cutting RRR, you know, the Fed has not cut RRR since 1992. Igor, really? So Igor says, well, why did it make the Aussie dollar go up? Because if the Bank of China is doing things to stimulate their economy, at some point an improved economy will increase demand. Remember, there's always supply and demand curves. Will increase demand for foreign products, such as, let's say, commodities. If you need some steel in China, let's say, because the economy is starting to pick up and starting to improve, and you borrowed money and you need to build a factory, if you need to build a bridge or you need to build a skyscraper, whatever you're building, if it needs steel, you might need iron ore, coal from Australia, for example. And therefore, if you're buying iron ore and coal from Australia and you're Chinese, you need to convert your yuan into Aussie dollar and then buy those commodities and then ship them home. So you'll see that in the Baltic Dry Index, for example. Okay. That's why Aussie dollar would go up. It has to do with expectations, right? So anyways, yeah, I still have to say I want the Bank of Japan to increase quantitative easing. And we did talk about it over and over and over and over again. But I still have to say they said they wouldn't do it. So, can we talk about, cultural stereotypes? I don't like to talk about cultural stereotypes, but let's use a cultural stereotype. It seems to me the Japanese culture dictates that you don't just say something and do the opposite 2 weeks later, right? Right? You plan things methodically, and if you say you're not going to do it, if you wouldn't do it a week later, you'd rather, stick a sword in your belly than to lose face. So, I know that's probably not true. Igor's, that's the old time. I know. That's why I'm saying it out front. I'm trying to be as open and honest as possible. Maybe I'm wrong on this, but I don't know. If Kuroda said he's not going to do it, I don't think he's going to do it. Maybe he'll just do it the next meeting and save face. I mean, what's the rush? Let's put it this way. Japan has been in this situation for 25 years. What's the big rush to change it now? Why does it have to be the end of October? Why can't they wait till the next meeting and then say, well, we weren't, so I don't know. I'll tell you what, if Kuroda hadn't said he wouldn't do it, then I would think he would do it. So if Kuroda said he won't do it, then I'm going to believe Kuroda. Oh, and Igor says even Goldman Sachs thinks will do it. Goldman Sachs will sell you anything as long as you place a trade because of it. Right? And then their prop trading desk will trade against you. So, whatever, dude. Make your own decision, right? So, right, so Igor says because they need to catch up to China. Well, yes and no. Japan has manipulated their currency way more than China has over the last 3 years. Remember, the Japanese yen versus US dollar was worth 75 just a few years ago. Now it's 122. Sorry, 121. Went from 75 to 121. Do you think some of it, if not all of it, was quantitative easing? Of course. China's just starting again. But yes, so if China's cutting the reserve requirement ratio and they're cutting interest rates, I'll tell you what, I think they're going to continue that trend. I think you'll see additional RRR cuts out of China. I think you'll see additional interest rate cuts out of China. And if the Bank of Japan thinks that as well, then they might want to consider further quantitative easing. But they don't have to do it in the end of October. And once again, I thought they would, but they said they wouldn't. So therefore, I'm going to believe that for now. Good morning, Nuno. Okay? You see my logic on that, guys? But anyways, UK GDP, just a first glance. A good number would be good, bad number would be bad. Shocker. Okay? Look, and there's no expected change in year-over-year numbers. Durable goods, yeah, okay, fine. A good number would be good, bad number would be bad. Right? And durable goods, I think if you strip out transportation and stuff, which is core, 0 is expected. So whatever, you know, if it comes out 0.2, will the world change? Yes, Adam, you're right. I should have said, hola, no. So anyways, so blah, 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 right? Like seriously, if durable goods comes out 0.2, the world's not going to change. If it comes out negative 0.2, we just don't want to see that. That will just add confusion to the market. That could weaken the dollar for a while, whatever. But at the end of the day, these things maybe will give you, let's say you can scalp 25 pips off of durable goods, but it's not going to change anything long-term technical or fundamentally. Okay? Do we care about CPI out of Australia? Yeah, especially since the Australian dollar has been improving. It was 69, now it's 72.5. But it's still been moving generally sideways. Okay? If you're looking at the daily chart on Aussie dollar, you might be longing, but that's your call. And it would be particularly good if you were long, your stop was at break even, and you got a good CPI number out of Australia. That would be really ideal. Okay? So good, fine. So we got all of that. I would say Aussie CPI up until that point is the most important. Okay? I'm saving my UK GDP. I'm saving that till January, and then the follow-up one. When does the follow-up one come in? March? But I'm saving my UK GDP for next year. Okay? All right. Then we get a good scalp out of Aussie CPI. You either want to swing it or scalp it. So like I look at the Aussie dollar and the daily, I'd probably like to long it today and hold it for till the end of the week. Or how about this, all the way to the end of the month? Oh, is it April, Marcia? Thank you. For the final? I thought there was a prelim, then a number, and then a final. But anyways. So anyways, that's what I'm thinking with Aussie. And then the FOMC. Are they going to change a policy? So the answer is probably not. Have you guys looked at the Fed funds futures market to determine the probability? And the implied probability, and then of course what we want to see is the change in implied probabilities. Have you guys done that already? Or are you just waiting for Uncle Wayne to do it? Yeah. So, all right. So, yeah, I think this is going to be a big deal. And what we want from them, not the decision, but in the statement, we want them to tell us they're going to do it by the end of the year, which is funny because there's only one other meeting. Adam says that Adam's already done it. 6% chance they'll raise. Yeah. Which is another way of saying 94% chance they won't. And you guys remember how you look at it? You look at the Fed funds pricing of the futures, right? For the Fed funds futures market. And you look at the difference in prices versus different months. And based on what market participants are actually doing with their money. Remember, they vote with their money, not with their opinions. That's why I don't like these surveys, cons, right? Consumer confidence and stuff. I just really don't like surveys, right? I just don't care about what you think. I just care about what you do. So when it comes down to, there's only a 6% chance of the Fed raising interest rates this week. Well, what does that mean? It means based on the way that professional traders are putting their money into the money market at different months, there's an implied difference in expectations in interest rates that get priced in. And so now you look at the different prices versus like someone that has a short-term bond this month, short-term bond next month, a short-term bond over the month over that. They're all going to be priced slightly different based on what they think interest rates will be in the future. And then you take the differences all in these pricing and you can figure out the probabilities based on how people are investing their money, not their opinion. Literally, the price will tell you the probability. And obviously, price changes constantly, like it does. The Euro USD is constantly changing in price, second by second. Well, so are these probabilities based on what prices are doing. So it's a very interesting thing to watch. So as far as professionals, I mean, who trades in the Fed funds market? Commercial banks. So the way that commercial banks are pricing their short-term bonds, I mean, we should watch that, right? I mean, listen, you can get JP Morgan's chief economics advisor, strategist, or whatever. They'll come out and tell you what they think, right? But shouldn't you watch what their trading desk is doing? Right? Which one is real? The PhD or the trading desk? So let me ask you something. Let's take something. I want to know your opinion. If the world is certain interest rates are going to rise soon, let's say interest rates in the United States are going to rise soon. What will happen to the US dollar? Just the expectation, not that it's happened, but inflation's high enough, interest rates need to go up, they're expected to go up. What happens to the dollar gets stronger. And then what happens to gold? In my midterm at Harvard University, they asked me that question. I said the dollar would go up, gold would get down, and I didn't get any points. They said I was absolutely dead wrong. They said, if interest rates are going to go up, no one wants to buy bonds because they're going to wait to buy their bonds, so they're going to take their money and buy gold with it. And I said, that's just not true. And I'm still in an argument now, going back and forth. So to me, it's like you got the guy, the PhD, that does all his little calculations and all his little models and then tells you what he thinks. But then what I care about is not that guy at the top of the PhD at the top of JP Morgan. I care about the trading desk. Well, Lucas, my argument with them is I said, look, if interest rates were falling, beginning to fall, not beginning to rise, or expected to fall, not expected to rise, then that's my observation. But anyway, so I'm still going back and forth with this on them, and I know I'm going to get it wrong. I know they're going to tell me their theoretical models are how the world works, and I just know it's not true. So, whatever. Tell me the truth, sir. Tell me the truth. All right. Then what? We got a busy week, man. Right? So now we're on to the Kiwis. Right? And then some GDP, German CPI, which is important, right? Because Germany is a huge exporting nation as well. So we care about China, we care about Germany, we care about Japan, so on and so forth, as far as exporting nations. And I guess it doesn't say it in here, but I think it's Friday. We get the Bank of Japan meeting. Let me do it this way. Here we go. The Outlook report. And is that it? Well, whatever. They're going to... It's funny. It still doesn't say it here. Oh, maybe I got page 2 here. It's funny. All right, well, let's see if this does it. Household spending, blah, 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 blah. Unemployment rate, BOJ Outlook. All right, well, I thought it would be labeled differently, but Friday's all about the Bank of Japan. How about we say it that way? Oh, Lucas, about what? Do you have an MBA? I won't discount you for that. No, but it's interesting, the difference between theoretical models and real world observations. Yeah, totally, right? You know, that means you spent a time in your life not wasting your time, which is cool. And I find it fascinating, you know, having so many years of real world observation, but had been self-taught so much through reading and observations and pondering and to go back, and obviously, you know, Harvard's not going to be wrong, right? My professors, with PhDs, they're not wrong either. I mean, I would have to be crazy nuts to think that, that I'm right, they're wrong. But so it's almost like the unified theory of quantum mechanics and quantum physics agreeing. We know they don't agree, but we know that they're both right, but they don't agree with each other. We need a unified theory. And it's almost like, how do you take what I know and how do you take what the PhD knows and how do you make them both right? And to me, that's interesting. And so so I'm a little worried that when I follow up these conversations and discussions, I'm a little worried that especially over email, that you can really, piss somebody off, for lack of a better word. And that's not what I'm trying to do. I'm very interested because I know what they're trying to teach, and for me, it's a very difficult thing as a student to say, well, I know what I know, but what do they want me to say is a very difficult question. And I have to keep asking myself that. And, I know and I knew it then. I knew in the midterm, I knew I knew I couldn't be wrong because I know I'm right. But then I know there's going to be, if they don't invest money in the bonds, then there's going to be more cash, and if there's no more cash, they're going to spend it on things, and anything should go up. But I mean, for what? 1 day? 2 days? 3 months? What time period are we talking about? 15-minute chart or a daily chart? Oh, well, so right? But I'm like, gold doesn't pay interest. Why would you, if you thought interest rates were going to go up, why would you buy gold? I understand you wouldn't put it in bonds, but because of interest rates expected to go up, the dollar would be strong. So why wouldn't you buy the dollar? And dollar is strong. And I said it's common knowledge. Gold is anti-dollar. Dollar will be strong in that situation. Trust me, I'm a currency trader. And if dollar strong, gold is going to fall because of purchasing power parity. A dollar buys more ounces of gold than it used to be. You certainly wouldn't buy gold if you're waiting to buy bonds because you expected interest rates to go up. But if you wanted to buy something, why wouldn't you just buy bonds now? Because gold, I mean, whatever. You get in this whole thing, right? You wouldn't buy a bond because it doesn't pay you interest rates, but you would buy gold, but gold doesn't ever pay you interest rates. You know what I mean? So whatever. Interesting question. So when do the two models agree, or how can we get them closer to agree, or at least how do you get my brain to understand what I know and filter it through to what they want me to say? Well, yeah, so Nuno says, it's all about the trading side, and yes and no. But again, I'm more fascinated in why is there a difference, and who knows, maybe that's my PhD if I wanted to do one, right? So anyways, so yeah, we're going to end the week on Bank of Japan stuff, guys, and we'll see what happens. I think maybe like all central banks, they'll just delay the inevitable. And Kuroda might have stuck his foot in his mouth. Maybe he didn't expect China to cut interest rates further. I mean, that's funny, isn't it? So, if he said he's not going to do it, I think he's not going to do it. I don't think he wants to bring shame to his family. So he'll delay maybe in January or something, right? Yeah, yeah. So we'll see. So if the Bank of Japan says they're going to do it later, then maybe, and then you'd get Japanese yen weakness. But I don't think that's the style of the Bank of Japan. See, it's like the ECB in contrast. When you look at how they conduct themselves in the past, It'll take them 3 months to tell you that their house is on fire. And you're like, yeah, but I've been telling you for 3 months your house is on fire. I can see the flames. I'm worried that your burning house is going to burn my house down. And I've been banging on your windows, banging on your door, ringing your doorbell, calling you, your house is on fire, your house is on fire, your house is on fire. And then finally Draghi, or even Trichet before Draghi, would come out and say, okay, we admit it, our house is on fire. And we're thinking about doing something, but we're not quite sure what to do. And you're like, well, throw water on it, throw water on it. And after about 2 or 3 months after that, they'll come out and say, well, we've smoked some cigarettes, we've drank some wine, we've talked about our emotions because we're European, and we've decided that we're going to throw water on it. But we're not going to throw water on it for 3 months. But we will throw water on it 3 months from now. They'll actually tell you, we're going to do it in 3 months. We could do it right now, but we will do it in 3 months. And that's how the ECB works. Bank of Japan doesn't really work that way. So there are differences. Okay? So what I would like you to do, just sort of a snapshot here, what I would like you to do some point in your career, it could be today, you get a big piece of paper and almost like a mind mapping process, draw out various central banks around the world, Bank of Japan, ECB, Fed, so on and so forth. And you try to start mapping out the personalities of them. Almost like, it's funny how people can tell you about the every relationship of every character in the TV shows that they watch. There might be 9 characters and the backstory of every character. And oh, this character, he's got angst because he had a bad father. And oh, this one, just wow, the detail. Or people that watch, sports. Oh my gosh. Sports fans, they know the name of the brother and sister of every football player in the NFL or something. If you only knew your central banks like a sports fan knows his favorite team and all the players, or how someone knows every character's backstory in their favorite TV show or shows, then you might be better off. So how does the Bank of Japan behave, and how is that differently from the Reserve Bank of Australia? Who are the players, for example? Governor Stevens runs the Reserve Bank of Australia, right? Kuroda runs the Bank of Japan, right? Pelosi runs Bank of Canada, so on and so forth. What kind of people are they? And then who makes up their committees? Are they hawkish? Are they dovish? What's the internal politics behind all these decisions? Because these people, let's say there's 8 central banks in the world that matter the most, whatever, you can make it the G10 or 11 or whatever you want. Pick your favorite central banks. So there must be 8 heads of these banks, and then they have committees. I mean, you get down to it, there's less than 100 people in the world that control $5 trillion a day. Shouldn't you get to know these people? Less than 100 people total, voting people, control the value of all currencies in the entire world. I think that's pretty amazing. And I think that's where you make your billions, guys. Honestly, I know very often we just want to talk about how to make 25 pips here and 25 pips there. That's fine. We can do that all day. But if you want to be a billionaire, you need to figure that out. Oh my gosh, chat room is full. Huh. It's funny, I haven't seen that before. Wow. So that's it. Literally, if you want to think like a billionaire, maybe be worth $1 billion because you know how to make these long-term investments that just are hugely profitable. That's what you that's where you want to be. Okay? You need to have that sort of concept to get there. Okay, let's do the commitment of traders report. Let's double check everything here. Is this giving us, yeah, the 15th of October? Okay. Oh, no, 12th of, is that right? 12th of October? Or did we lose a week? No, 19th. Okay, that makes sense. Good, 19th. Oh, it's right on Forex.Today. Right? Right there, Forex.Today. Here, let me give you a link, but you can go anytime you want. Just click on News, COT Calendar, or COT Report. It's updates every Friday, guys. Okay? So you're welcome to come by and, you can do this analysis on your own whenever you want. This is one of the prettiest, charts of the COT that I've ever seen, and that's why I use it every day. When I first started looking at commitment of traders report, it's funny. It came out. I got it, not the report, but I got a book. I bought a book on long-term futures investing. Maybe when I was studying for the Series 3 test, which is the futures and options test for professionals. I might, in preparing for that, I might have looked into the COT, and then I bought an old book, and you used weekly charts in these trading strategies. It's just very interesting. Like you might only make 1 or 2 trades a year, but you could do it based on commitment of traders report. So that's when I first started looking into it, and then so I started downloading this this report. You get it from the CFTC website. So I would download it, it would come out as a spreadsheet, and it was just numbers. And then I think I paid some money to a service that would turn it into a chart, so on and so forth. So fast forward to what you have now. Here it is free at Forex.Today in the prettiest version that I've ever seen it. And I used to spend like, I don't know, hours trying to figure it out. All right. So here we are. Euro. Okay. Slight increase in longs, slight decrease in shorts. Going the wrong way though. So you can see the net because a little more people long, a little less people short. Okay, boom. Now the interesting thing about this is, we have this period of rising Euro USD, and especially over the September, October, no change in the net positions. And, and then you get this last sort of hurrah increase, and it's just people making mistakes. Pretty interesting. And maybe that's what creates the catalyst. Maybe as an observer, this whole time, including last week before we had this big move here in the positions, we had talked about that no one's longing it. So when bears decide to short it, it's going to be dramatic to the downside, right? Because the bears are going to re-enter. The market is going up, but it's not bullish. And so those bears are going to get back in. I'm wondering if you almost need the false rally so that you can slaughter whatever remaining bulls there still are, and maybe when you hit their stops, it's the first cascade, and maybe that's what the bears are looking for. You know what I mean? Maybe that's what you suck some people in, almost like the pump and dump idea. You're waiting for someone to falsely go long, and that's what puts you short. And then their stops get hit, which makes a bigger, let's say, bearish engulfing candle, which gets more bears in, and you get the snowball effect, right? So, anyways, we know these guys got slaughtered. The funny thing is, that's all we talked about, is that Euro USD was going to come down hard. I just didn't know when. Could be today, could be tomorrow, could be next week. Well, it's moved. Love it. Fundamentals win again. Okay, pig is a more interesting question, isn't it? Well, let's look at the black line here. This is the net. Okay, longs versus shorts. When you're net, when you're at the gray line here at the zero line, that means it's equal. There's, let's say 1 million contracts long and 1 million contracts short, or no contracts at all. Either way, it's going to be zero. And look how short the market was at the beginning of the year. And it's just been slowly working its way up. Notice how at one point the pound dollar had made a lower low, but there was less bears in the market than before. That's almost a sentiment divergence, isn't it? Isn't that interesting? I think that's highly interesting. So it's almost like the euro dollar. When euro dollar was going up but no one was buying it, look at the pound dollar was falling, but less, there were less bears. Price was lower, but there was less bears. Isn't that maybe something that we should look for to find bottoms? I think that's interesting. And notice that it's, we saw it in like March, but it didn't reverse till about May. So you could reflect this like for almost a whole quarter, right? For 3 months, you can watch the divergence and get ready, and maybe time it to a central banking meeting. I mean, think about that. You could say, I've spotted divergence in the COT report, and I'm waiting to see what happens at the central banking meeting on X day. Okay? Interesting, isn't it? And then so on and so forth. All right, so as this line is moving up, it's less and less bearish, less and less bearish, less and less bearish, less and less bearish, neutral. And now the market is technically bullish. Will it stay here? Well, remember my guess many months ago was that we were going to be surprised in January at how improved the UK GDP will be, and that the market's going to turn very bullish on the British pound. Does anyone remember why? Remember, I don't guess. No, it has nothing to do with the Fed. Right, the back data is going to change. Right. The calculations that they do to calculate GDP, their inputs will change, and their outputs will be affected in a positive manner. It's not necessarily the new numbers that I care about, Demeter, right? It's less bad numbers from the past. So again, and we covered, I did this in a whole video, I don't know, 3 months ago, 2 months ago. But based on the inputs that go into the calculations of GDP, we're going to get a much higher end. So just imagine we're going to drop a really bad number off the calculation. So that's going to have a positive outcome. But then we're going to add a much better number into the equation. So we'll have one bad output removed and replaced with actually a pretty good input, and the differential between something that's very bad and something that's okay is actually pretty big, and there's going to be a big upside surprise. Mike, if you know anything about the Canadian, what's his name? Oh man, Carney. Sorry. If you know anything about Carney, he'll do anything he wants to do. He doesn't give two hoots about anybody else. He's that confident, and rightfully so. He doesn't need to wait for Janet Yellen. He'll do what he wants to do. If Carney wants to raise interest rates, he's going to raise interest rates. Now, he also has a committee that's involved in that decision-making process, but he's not going to say, well, I want to raise interest rates, but I can't do it because I have to wait for Yellen. That's not Carney. He didn't run the Bank of Canada like that. Canada wasn't in the crisis because he ran the Bank of Canada the way he wanted to run it. So he'll run the Bank of England the way he wants to run the Bank of England. Even more so. I mean, think about it. The Bank of England hired a Canadian? And then he has to sit around and say, well, I want to do my job, but I have to wait for Yellen? There's just no way. No, but I don't know. You're twisting. I don't know. I guess we look at it completely different. I don't look at it as an emotional thing like, well, I want to do this, but I have to wait for that. No. I think he'll look at the data. He'll raise interest rates when it makes sense. Being first, whatever. Now, if you want to take a different angle, maybe the same way, but a different approach, do they call each other and try to time their policy changes? Oh, yeah. So China cuts interest rates first. Japan adds quantitative easing second. Then ECB gets to go third. Then the Fed raises interest rates. Then the Bank of England raises interest rates. And, Canada and Australia go neutral. Yeah, okay. It's more coordinated, but in a logical way. Okay, but not in an emotional way. Okay, look. Yen, neutral. Oh boy. Isn't that interesting? Neutral. How long have we been at 120 on the USD yen? Since August 15th? August, September, October, 3 months, right? 90 to 100 days. We've been at about 120 on the Euro USD. And look, we're neutral. So it'd be interesting to see if we see a change here. But either nobody's in the market, or like I said before, a million people are long, or there's a million contracts long and a million contracts short, and the net is zero. Either way, the market, okay? The market is neutral. Not my opinion. These are open positions. There's just as many people long as there is short. Or there's nobody in the market at all, which is probably closer to the truth. But the question is it going to stay neutral forever? No. So it will change. When will it change, and in which direction will it change? Well, again, you're going to have to do your own observations. But I don't think we're going to sit here forever. But we will need a policy change. Okay? All right. Beep. Beep. Now, Aussie has had a pretty good run lately, right? We were down here at 69, made our way up to what, 73-ish, 74-ish. And we closed last week, what, around 72.50. Oh, look, we're 72.50 now. All right, but we've had, since April, a slow increase in net positions. What it really is less bears, less bears, less bears. Okay, I can't say more bulls per se. Well, I guess I could this way. This declining line is a decline in short positions. How many, would you say from here to here there's been a dramatic increase in bulls? Well, actually, there's a slight decrease in bulls over that period. From June to now, there's even less bulls than there used to be. Okay? So I'll just say there hasn't been much of a change at all. I think that's fair to say, right? We had this little drop here on the double bottom. Okay? But other than that, it's been fairly neutral for the bulls. In contrast, significantly less bears. So depending on your fundamental bias, and this is where fundamentals come in, you actually analyze the data, the economic data, okay? You can discern whether the large institutional non-hedging Forex traders are waiting to sell again, or perhaps something's changed over the last 3 years, and maybe we've bottomed out at 70, and maybe things are just going to be less bad, which could be the beginning of a trough, which is then the beginning, at some point, of an uptrend. Now remember, I said 2017 would be the rally in commodity currencies. So maybe the beginning of the bottom. Right, Igor. So the thought process, though, is that the Reserve Bank of Australia counteracts that. Okay? So we'll see. We'll see. I mean, this is where we are, but I want you to put your, this is almost like a compass, guys. It's not going to get you home, but it'll help you understand where you, what direction you're going, right? It's like, it could be possibly the beginning of a change, and you should observe what's happening over the course of the next several weeks. Well, counter means opposite, Igor. So if the RBA, the Reserve Bank of Australia, doesn't want interest rates to go up, then they will do something that will create the opposite and equal reaction to rising interest rates. So they'll do something that will impact interest rates in the opposite way. Okay? I don't know. This is where you need to study your fundamentals. There's a central bank has multiple tools. Quantitative easing, not the likely response. Okay? So pay attention, guys. All right? Wake up and smell the coffee. And I'm going to skip Kiwi, and I'm going to go to CAD. All right. Beep, 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 boop, ba-doop, boop, ba-doop. Significantly less bearishness, isn't it? This is the market here getting aggressively bearish. And significantly less bearish. Now, if you look at the 4-hour chart, this has been moving beautifully to the upside. Be interesting to see what happens. So look at the red line first of all. This is the USD CAD going up, which means the Canadian dollar is getting weaker. The black line are short, more short positions than long positions. So the market is getting short, 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 short Canadian dollar. Okay? Until here. Okay? Until in here. When the market got near 130, what has happened in price? Look at the, come on, chart. Okay, look what's happened in here once the short positions hit their peak. We've hit 130 in price and basically moved sideways. I mean, yeah, there was a little, it jumped up to 33 and then it's come down. But it's interesting, right? If you were to follow this black line down, that's the Canadian dollar weakening because these are short positions in Canadian dollar. USD CAD rise. And then all of a sudden, less short, less short, less short, less short, less short, less short. If the US dollar wasn't so bullish, you'd almost expect this Canadian dollar to be gaining, wouldn't you? So, if, based on what we know, what would be the better trade than this red line? CAD yen. Yes. Because at least the yen is neutral. At the very least. We know that because we looked at it. And if the Japanese yen actually became bearish, you'd do even better. So why not CAD pound? Well, this is suggesting less and less bearish, which on the short term, if you were looking at smaller time frames, you'd say bullish. Okay. And this also says bullish. So why would you trade two bullish currency pairs? Yeah. Well, you brought up a good point, though, Igor. Okay, and that's why we use this. You might want to say, well, you know, there might be something better. Have you guys read the currency outlook that Kate posted today? I hope you spend time on the website, guys. I think the Forex.Today website's quite good. So there's some nice resources there for you guys. Well, Igor, okay, well then that's good. At least what you do is you pick your favorites, right? So anyways, what I'm going to do now is I'm going to upload today's video, and it'll be up here later today, right on the homepage. Right? So I'll leave you. I'll bid you adieu, and I'll see you tomorrow at our live webinar at Forex.Today. Why don't you go through some of today's posts? Right? There's probably a dozen already. There's some nice posts here for you to review for today. And if you're registered, why not leave some comments or some, you know, because for example, let's look at, I don't know, I'll pick a YJ trade, right? Let's do a YJ. Okay, at the bottom you can leave a comment. Okay. So anyways, I'll see you tomorrow. Mark's going to be off for the next few weeks without internet. Wow. Yeah, where are you going? To the dark side of the moon? Gee whiz. And going to Russia. Enjoy the salt mines. Peace on earth, may the pips be with you, may your profits be above average. See you guys.